Hello everyone, welcome back. Going to be doing another trade review today. So this will be a review of the trade I took on pound dollar on Tuesday of this week. It was a big trade, just over $11,000 profit, I think, 11,000 something. It was a really nice trade, really quick, easy. Got entered and immediately started running to my target, which is exactly what you want to see. So let's get into it. So I'm going to start with dollar, I think. Go over what I was looking at from dollar, and then we'll switch over to pound dollar, and yeah, I'll break down the specifics of the trade. So dollar. So this, between these two black lines, this is Tuesday. So this is the day that we took the trade. I have been bearish this week on dollar. And so yeah, just briefly, what we did on Monday was we came higher. This was the Judas swing of the week. We took this level of buy side liquidity. We then moved lower, and then from then on, I was expecting this high to remain intact, and essentially any move higher, I was seeing that as a preparation to move lower. So that's exactly what we got when we opened up on Tuesday. We got this move higher. We took out this level of buy side, this level of buy side, and just about tipped this level of buy side. We then followed that up with some displacement lower. We took this level of sell side liquidity. So as you can see, we made sort of relative equal lows here. We then came off those lows, and we just tipped this swing high. Now the reason for that is, if you see it get close to a level of sell side, and you see it sort of start trading upwards from that without running below it, you want to kind of identify the first most obvious swing high, because it's quite likely that they'll just tip above that, because people that believe in support and resistance will see this as a level of support, and they will have buy stops above swing highs because they believe that's a sort of breakout pattern. So yeah, what I like to do, if I see that it's showing a sort of fake support, I'll find a swing high, wait for it to tip that, and then that's when you can expect it to come lower and run the sell side, because they'll enter buy stops here and they'll have their stop losses below here. So that's exactly what happened. We ran this high and then we came lower. So you can see we didn't run it by much. We just sort of engaged it. Then we offered some relief. So we had displacement lower, just tipping the sell side. Offered some displacement, and then this candle here, this down candle, the 1:30 p.m. candle, tells you everything you need to know. So we've taken the sell side, offered relief, and then we've shown continuation by closing below these candles, making them a bearish order block. So if we take sell side and then still create a bearish order block, that tells you that it's wanting to continue lower. So what do? We zoom out, and we find the next level of sell side liquidity that hasn't been taken yet, because it took this, so it's no longer targeting that. It's shown us that it still wants to continue lower. So then we've got these relative equal lows here, so that's our next target, and that's exactly what it ran for. We then did have some relief taking this, and then you can see it was bearish for the rest of the day. So the important candle is this candle here, because I took my trade inside of the 1:35 p.m. 5-minute candle, and that was because of the 1:30 p.m. candle. That told me everything I needed to know, so then I was able to look for an entry in this next candle. So hopping over to pound dollar, if we go out to the daily time frame quickly. So I was very much bullish on pound dollar for two reasons. Firstly, because I was bearish on dollar And the reason why I chose pound dollar over euro dollar was because I'm also bearish on euro pound. So bearish dollar and bearish euro pound means very strong pound dollar. So this was Monday's candle. Monday's candle told me a lot. So we'd run buy side here on the previous Wednesday, and then we'd had quite a long wick. So you then want to find 50% of that wick, and then if you close above that, that's a good sign for continuation higher, because this is now redelivered rebalance. So from here to here, you can treat that like a fair value gap. And so yeah, any return back into consequent encroachment of this wick can be seen as a buy. So we'd taken this buy side and we'd shown that we wanted to continue higher by closing above that. So we labelled the next level of buy side liquidity, which was in here. And then, so yeah, this was where Friday closed. So for the low of the week, you're looking for it to come back down into here somewhere. Low of the week, you typically want to see form on either Monday, Tuesday, possibly Wednesday. But it turns out we were in a sort of rush to set the low of the week and move higher. So we did it first thing out of the gate on Monday. We had displacement lower, taking out sell side liquidity into this level, and then immediate reversal, overtook this fair value gap, worked back down in to the premium high of it, and continued higher to take this level of buy side liquidity. Let's go down to the 5 minute now. So that was what we did on Monday. So Monday, targeting this level of buy side liquidity is looking really good, because we've set our low of the week, we've taken sell side, and we've immediately come higher. So we've taken this level of buy side, so we can expect some consolidation after that, because it didn't have to run immediately up to here. So we take this buy side, and then we set a big consolidation range. Tuesday morning, we run the highs, then we run the lows. So this consolidation, everyone's been tipped into it. So we run the highs, run the lows, and then we get some displacement back up into the range. So this is the new range from this high to this low, because we've taken both sides of this consolidation. So this is the new range. So essentially what you're looking for from this is you're looking for some form of displacement, and then you want to wait and see if that displacement is sort of confirmed or overlapped. So with this displacement here, this fair value gap, if it's bearish, you want to see it overlap that and then possibly come back into it to use it as a resistance and then break lower. If it's going to come higher, you want to see it hold this, you want to see it trade back down into here and then give a break of structure higher out of this. And that's exactly what we got. We moved back down in and then we got displacement higher. And this box here, this is an hourly fair value gap. So we get displacement higher out of that. We then work back down in to a discount level. Between this low and this high, 50%, we tip just below that into the hourly fair value gap. We then continue higher without taking this high yet, that's the key. So we're able to disrespect all the premium arrays in here. So we close high enough to disrespect the order block or any fair value gaps in here. We close above all that, but we don't yet take the buy side. So that tells you that any move lower can be seen as a buy. And especially because we're close to this level as well. You can expect once it's ready to move higher, once it takes this, it should just continue up straight for this. Now, on some occasions, you could just buy the retracement. But on this occasion, we have quite a few fair value gaps that it could potentially come down for. You know, potentially it could come all the way down for this one. So if you're buying this first fair value gap, your stop has to accommodate this one. So let's say you bought that. your stop would have to be at least here, maybe even below the mean threshold of the order block, or even just below the fair value gap, the hourly fair value gap in general. And if this is your target, you're not even looking at a 1-to-1. So on these instances, if there was only one fair value gap in here, or one area where I was expecting retracement, you could potentially just buy that. But yeah, this didn't have suitable framework for that, so I had to wait for the retracement and then wait for it to show me that it's done retracing and it's now ready to move higher, which it does off the 130 candle, which you should remember from dollar was this candle here. We'd taken sell side, offered relief, and it showed me that it still wanted to come lower. Exactly the same thing from pound. Show me that it wanted to come higher here, offered the retracement, and now it showed me that it's done retracing and it's ready to move higher. So what do we have in here? We have two down candles with quite a long wick. This candle closes above all of that, closes above the higher the wick. So we can look for an entry anywhere inside of this wick. Potentially even consequent encroachment of the wick. But because this is the 5 minute, I would highlight that wick, and what I would do is go down to the 1 minute, or just anything below the 5 minute candle basically. So below the 5 minute time frame, and I typically like to enter on the first available PD array, so I don't have to worry about will it come down for my entry. If I'm just aiming for the first available PD array, I should be absolutely fine in getting an entry. Sometimes I do get unlucky and it doesn't come down at all, it just runs, and so potentially I should have entered on the retracement rather than waiting for it to show me continuation, then waiting for an entry. Sometimes that doesn't happen. Sometimes we just get the retracement and then we just go. But that's trading. Sometimes you're going to miss trades. Sometimes it's not going to give you an entry. I prefer to trade this way. I find it a bit safer. Instead of, buying the retracement and it just doesn't stop retracing, or it kicks me out and then continues. This is just what I've found works best for me. So inside this box is the 5 minute wick. We're looking for any lower time frame PD arrays inside of there that we can buy. So immediately, first one we have is this fair value gap. Now admittedly, when I first saw this candle close, because this closure of this candle is also closure of the 5 minute candle, when I saw this close up here, I did want to try and get consequent encroachment of the wick, which is this dotted line here. And so I saw that overlapped with this 1 minute order block. So initially my first entry was on the consequent encroachment of this wick. However, when I saw the fair value gap here, I thought, let me not be greedy. There's no guarantee that it will come down into this wick. It might just rebalance the fair value gap. So let me just buy that. So you can see my executions here. I bought this candle here, and I bought just below the midpoint of this gap. And as you can see, this candle did come lower into the body of the order block and also touching consequent encroachment of the wick. So I would have been fine with that entry, but that's not a guarantee. So I took the first available PD array, which was the fair value gap. I think my entry was about here. Yes, it was on the closure of that candle. And then my stop loss, I don't exactly remember. I think it was below this gap, or maybe below the order block. Hang on, let me look that up actually. So my stop loss was below 50% of this gap. It's a very safe stop loss. Could have put it just below the 1 minute order block here. Because I'm not expecting a big retracement here. I'm expecting it to move off one of the first PD arrays. But just in case it wants to come below here, it could work this fair value gap. The reason why I've got it below the midpoint of this fair value gap is because this is the first bullish fair value gap we get after the retracement. That makes this a breakaway gap. So I'm not going to go too much into detail with this because ICT has covered this many times. But essentially, yeah, when you get a retracement and then you get displacement away from that in your expected direction, the first fair value gap, you want to see that stay completely open. So me putting it below the midpoint of this is just a final safety precaution. If for whatever reason it does want to come into here, which it shouldn't do, you would also be absolutely fine putting your stop just into that. But I put it below the midpoint because it should stay completely open, but on the off chance they want to come and fill it the tiniest bit, they shouldn't fill more than 50%. So it's kind of an ultra safe stop loss and still offers great risk to reward. This offered about 2.5 risk to reward. And then yeah, you can see that was all we needed. One entry, immediate feedback, immediately moved higher. We got a slight retracement back down into this fair value gap, and then once we showed continuation out of that, so once we moved back down into here, then created another bullish order block, that's when I moved my stop loss up to break even, because any retracement lower from here should be held by this order block. We shouldn't be coming back below this. So with my entry down here, we can put my stop loss well below this order block, and as you can see, all retracements were held by this order block. You could have even, if you were being aggressive, you could have added a second entry here, because similar to here, we had a move higher which disrespected all premium arrays but hadn't taken the liquidity. I mean, yeah, we took it a tiny bit, but this is still relative equal highs. And then we offered the retracement, so you can expect it to touch this once, twice, and then it flies higher. And this level of buy side is exactly what it comes for. So yeah, a very, very nice trade. Immediate feedback, no messing around, no wasted movement in the trade. And yeah, very well executed, very well delivered. So I hope you enjoyed. I hope that gave you some good insights. Hope you felt like you learned something. And yeah, have a great weekend. Thank you very much.